Thank you, Angelina. It was very good presentation. I think just want to go back to some of the basics because, you got in very deep. It was quite technical. I'm not sure everyone got it. I see questions about how leverage works and stuff like that. But maybe just to start with, I think one of the first slides that you put up was around, the people who are trading are sort of like male, 35. Can you describe a bit more about this? Are these professionals? Are these people who are already trading things like FX, commodities, or these are people who are just testing the water? And who are these people who are trading digital asset derivatives?
There's a number of different classes of people that actually trade this. The ones that I know best are people that actually work in securities firms, and they're usually traders themselves. And they got pulled into this because it was an interesting new asset. So these are, and I use this term very, very carefully, but they are guys that are usually traders, and I keep saying guys because truly almost 95 to 98% of most of the crypto assets trading are from men. And there are very, very few women in this whole industry, which we'll talk more about in a second. So you've got one class of actual traders that work in financial services. Then you've got a group of people that were gamers. So there's a number of gaming sites, and these sites all have discussion groups in Reddit, in Twitter. So these people who game actually start moving into Bitcoin as a way to make money. Maybe they bought Bitcoin because they were playing games and they used to pay for their armaments or their saws or their axes by Bitcoin. So they had the Bitcoin and they started trading with it. So these are young men who game, but they also are very tech savvy. They have Bitcoin, and then they get in a group and they start trading together. And then the third is just people that try it out, and they are trying it for the first time, and then they get hooked into it. And these are people that are just office workers, and they get hooked into the fact that you can make a lot of money. So in my, or lose a lot of money. So I met a doctor, for example, and what he did was he was an early adopter. He had heard from a trader, hey, there's this thing called Bitcoin. So what he did was he went in head first, and he bought a lot of Bitcoin, and he made a ton of money. In fact, it actually allowed him to actually buy a business in trading in Bitcoin. So these are some of the people that you meet that were early adopters, and they're the ones that are trading and hedging their positions.
So you talked about making a lot of money, but also losing a lot of money.
Losing a lot of money.
But also one of the things that you talked about was about the fact that actually you could only lose what you put in into the exchange. I think there was a question from the audience, but could you explain a bit more about that? How can you only lose? So even though you have all the leverage, but you only lose sort of what you put in. Yeah.
So you make the decision of how much you want to trade. So let's say you have one Bitcoin, which is $8,000. Now, if you're going to trade in this, I would tell you, please don't put in one Bitcoin. You can actually fractionalize it down, and you can play with it. So you can put in 0.1 Bitcoin. And basically, you deposit it, you move. First, you have to put in a Bitcoin or a portion of it into your wallet. You have to transfer that into a cryptocurrency exchange. And then you tell the system how much you're going to put in for that one transaction. So you can put in 0.1. Then there's a lever. You can choose from 0 leverage to 100 times leverage. So basically, you can move it either way on the spectrum. So let's say you wanted to move it 50 times leverage. You moved it 50 times leverage, and you put in 0.1. That is all you will lose. You may lose it very quickly at 50 times leverage, or if your bet went the right way, then maybe you made some money off of it. But you will only lose that 0.1 when you allocate to the transaction. This is something that regulators don't understand because they think, oh, there's going to be a margin call, or oh, somebody's going to go coming chasing after you. That was something that was decided in most of the conventions, especially as I discussed it with the 3 founders that developed the system. They said, you know what, I'm never going to chase Zhong. So the only thing that I can do is to actually allow him to only lose what he puts in his transaction. So it's not like a futures position on HKEX where every 5 minutes you get a margin call. That's it. Once you lose it, you lose that 0.1, but that's it. So you still have your 0.9 left of your Bitcoin in your wallet. You only allocate what you put in for that one transaction.
Okay, so you touched about it, but we talked about margin calls. We come from the world of clearing guarantee funds and stuff like that, and sort of I think the risk from the platform perspective is sort of covered by the insurance fund that you also mentioned. In your opinion, I guess coming from the traditional world, is this sort of sufficient? Is there more that could be done or can be done to protect the risk of the platform itself? Yeah.
For the platform itself, that's why security is, there's 3 things: security, operational, as well as making sure that investors understand what they're getting into. So let's take it each one. In terms of operational, a platform has to have enough financial resources out there. There are many, many new exchanges that are coming up. You have to make sure that you know that they have a track record, and you can see them on Exchange Wars in terms of the different numbers of exchanges. There are almost 600 exchanges out there, both in spot as well as cryptocurrency derivatives. So you're looking for exchanges that may be regulated. So Coinbase, for example, regulated in the United States, or exchanges that have a track record with trading. And you can check in terms of from Reddit, Twitter, you can check comments from customers that have actually traded. And they'll tell you the bad side too. Oh, I've been wrecked. They'll tell you the bad side and good sides. In terms of the insurance fund, the insurance fund is something that was put in place when they developed the BitMEX platform. And why was it put in place was to protect investors on both sides, so that if they were auto-deleveraged and there wasn't enough money on either side, that insurance fund could actually pay out to the other side to make sure that the person at the top of the making the money would actually get paid out. So I've only seen once where there was a problem where there has been a payout. Every single time the person actually making the money has been liquidated before they've made the top amount, and likewise on the bottom. So we had a glitch in the trading system, and people were paid out very, very quickly, in fact, within the day. So having the insurance fund there that's strong, it actually helps bolster the exchange. But the most important thing is that people cannot take the insurance fund. It's actually separated as a separate entity and is used for the good of customers. And now, because of that, many exchanges have actually formed insurance funds. Some are small, some are big.
Yeah. So we talk a bit about BitMEX, we talk a bit about, you put up a list of exchanges. Those are mostly in the unregulated space, right?
They're all in the unregulated space.
They're all in the unregulated space. Yeah.
Now, that being said, BitMEX is actually licensed in the Seychelles. Binance is actually licensed in a number of jurisdictions, including North America now. So slowly, wherever there is a regulatory foothold, exchanges are trying to find a place where they can be legitimate.
Yep. But there are also, I would say, the traditional regulated exchanges. So CME, CBOE, ICE, who are also trying the same thing, right? Digital asset derivatives. So CME launched, CBOE launched a couple years ago. ICE just launched, but they've not worked out, right? So compared to what you're seeing on BitMEX and Binance and all these markets, the CME, CBOE, ICE volumes are bad, pretty much, right? Why do you think that is?
2 factors. One, you can trade directly with Binance. You can trade directly with Deribit. You can Dr. Nick can set up an account right now to actually get on the exchange. Whereas if you want to trade on ICE, you want to trade on Backed, you have to go through a Backed broker or an ICE broker. So they have to be licensed. So you have to go through that or a affiliate broker. So a Malaysian broker that has a relationship with an American broker. Then you have to go through KYC. So then it takes a number of hours for you to get the account open.
Days.
Days. And then you have to deposit the funds, and then the order has to be placed, and so on and so forth. So it is the level of actually having an intermediary in between. It's also having the opening of the account being so onerous. It's also that it's so difficult to get access into CME as well as into BACT or ICE right now, especially for Asian investors. Now, they're trying to actually get more access. So I've been talking to ICE. The head of marketing is actually trying to get out there. But you still have to be a licensed broker to deal on those exchanges. So it doesn't allow you or Dr. Nick or anybody else to actually get on the exchange.
So is there lessons to be learned from this? Will they ever be as big as like a BitMEX? Or if they need to be as big as a BitMEX, what do they need to do? Get rid of all the brokers?
Interface with the client directly, yes. That will be, and that's market changing. That's structure changing. And I think that's a little bit too much right now for the financial services market. If we were to do that, that would have to be a wholesale change by all regulators working with IOSCO to do that. And that would be a big thing.
Okay, so we talk a bit about derivatives and it being quite a complex product. And currently it seems that the traders who are trading are mostly still, I guess, individuals, retail, well, I wouldn't call them retail, sophisticated retail investors. But obviously the big prize at the end of the rainbow, I guess, is this hope that the institutional players will also come into the market and we'll see an influx of institutional funds. Is that something that you're already seeing, you're anticipating, or it's too difficult for these people to understand and they might never ever put money towards this?
The institutionals are really, really interested and in fact are trading on these exchanges. But they trade off of offshore exchanges and they probably use a different account. So there are exchanges, there are institutionals that are trading. The problem is these institutions are usually licensed. So if they are trading, they have to use a foreign subsidiary. But most of it, because of the KYC issues, that's what precludes many institutions from actually trading on many of these crypto asset derivatives exchanges. But what you're seeing now is a shift that these crypto derivative exchanges will need to move into the KYC area. And you're going to see them changing their business. So you're already seeing Binance, you're already seeing a number of exchanges move towards KYC at the back end and possibly soon KYC at the front end when you actually enter the exchange. So once they do that, institutional investors can actually take advantage of the liquidity on these exchanges.
Okay, last question on derivatives. We're going to sort of go into funds because we did promise we want to touch about funds as well, which is, this interesting relationship between the spot market and the derivatives market. I think traditionally with other asset classes, eventually the derivatives, the futures market leads the spot market. Digital asset derivatives is so new, but yet the volume is so big. Do you see that also happening in this space where, eventually it's the serious guys who are trading the futures, the derivatives market, and they are the one who's actually leading the price on the spot?
I think it's already happening. And if you see right now, if you go to that website I told you about, Exchange Wars, so BitMEX, for example, is the #1 exchange, and that's the one that's actually leading the spot price. Because when you go buy a Bitcoin, let's say you go to a fiat crypto exchange, you're going to put in your credit card. It will take you a while to do this, and there are service fees and so on and so forth. But the actual price that's actually trading, what is a market? A market is where a buyer and seller actually transact. And because there's so many buyers and sellers at the same time, you actually get the most accurate price of what an investor thinks that he or she should buy at, and also a seller should sell at. So I think the derivatives exchanges are now pretty much the arbiter of price in terms of this. And what you're going to see is a whole new industry eventually of indices and indices providers. So I think that's another big area of growth that hasn't actually happened yet, but I think in the next 2 years, index providers will actually move into this.
Okay, let's change gear a bit into funds. So you started talking about funds. We have seen Pantera, we have seen Dragonfly, we have seen Galaxy. Give us an idea about these funds. These are mostly wholesale, or they're people trying to offer this to the retail market?
They're mostly to the wholesale institutional investors. So in the case of Dragonfly, for example, some of the big seeder funds were the owners of exchanges. They were the ones that Dragonfly raised capital from. And you're seeing sophisticated retail plus some institutions just getting, but the big one is family offices. Those are where people are getting the money from.
Yeah.
So it may be some of your rich developers in Malaysia who have family offices.
Yes.
It could be rich Hong Kong families. All of the big family offices are now getting into this area. So they're the ones seeding these funds. So the Galaxy Fund, also institutional, there are some tranches that are more sophisticated retail.
Yeah.
In terms of Pantera, also more sophisticated retail and some institutional.
So there's actually two types of funds, right? So one is about funds that hold the digital assets themselves. They go and buy Bitcoin, buy Ethereum.
That's the Galaxy
right?
Fund.
Yeah.
So that's Novograd's, for example.
But there's also people who invest in the businesses. So a bit more traditional. They go and buy exchanges. They buy ICO tokens maybe and stuff like that. Is there a different crowd for this, different appetites, or would you say it's still the same people who are really enthusiasts who are just looking to get a share of the action?
I have spoken to some of the founders of different exchanges, and what they've basically said is, look, I'm going to hedge. I'm going to set up my own investment fund myself. Because crypto is so cheap, I'm just going to go invest and do angel investment. Because I can put in $1 million at a B structure and get 10% of a company. So I'm going to do that myself. But also, I'm going to hedge too. I'm going to put some money in Dragonfly. I'm going to put some money in Novograd's and basically diversify in this industry because it is so inexpensive right now. So you can buy 10% of a fledgling exchange for a couple of $1 million right now. And in fact, there's only one shareholder of BitMEX, and that was a fund called SOSV. And they were the first feeders to actually fund BitMEX. And you know what? They've made so much money off of that investment. It's their most successful investment. But they are an accelerator, and they took a punt. So it's just finding that one unicorn. And if you're an investor in SOSV, you're happy because all of that has done well.
Yeah.
You just need one. I met a guy in Silicon Valley just recently, and what they do is they provide facilities. They provide real estate for startups. And he basically puts in maybe 200, 100 into promising startups. And he has done so well. He actually identified Google and actually gave them real estate, or actually gave them their offices. And they actually incubated a number of companies. So you just need to find that one, and that will actually make up for all the other ones. And it's the same with these funds that are hoping to find the unicorn, which Eli was talking about this morning.
So let's talk a bit about the first one, which is fund managers who are setting up funds that hold sort of digital assets. So they hold Bitcoin, Ethereum directly. So if you were a fund manager like that today, or maybe you're not. So what advice would you give to these people? How should they actually go about doing this if they want to offer part of their funds as digital asset? Yeah.
They first need to establish that there is a request or a need by their clients. And if they do decide, like they're managing funds for a family office, then they're going to have to put in the infrastructure. So part of that infrastructure is documenting in their prospectus or fact sheet how they're going to do this, what assets they're going to buy. And then what they're going to have to do is they have to go to their regulator with their plan. And their plan should be well documented. Their plan should actually document how they're going to custody the funds, and that's the most difficult. If you're going to buy through an unregulated exchange, I don't think the regulator is going to be very happy with it. But if you buy with a regulated exchange like Coinbase and you keep your assets there, then I think the regulator in any jurisdiction would actually buy off on that because they're looking at Coinbase being regulated by the US SEC as well as the banking authority there. So that's the way that a fund should actually have an infrastructure document in place. When and how are they going to hedge on this too? I mean, if you buy the cryptocurrency, it's not going to always go up. It will go down. And that's what people don't seem to realize. Assets go up and down. And how are they going to hedge? And that's something a regulator will ask you. How are you going to make sure that this person's assets? That is why you haven't seen that many traditional fund managers move into this industry, because they have to think through the entire business plan of how they're going to launch this. But then you're seeing Princeton and a number of colleges move into this industry because they have institutional investors that help them do this. So that has been the big interest, is the universities.
And the endowments, right?
And the
from
endowments,
these
yeah.
universities.
Because this is an asset that's here to stay. It's how do you harness it and how do you actually control it?
Maybe like a related topic, which is you talked about indexes, but there's also a big push towards ETFs,
Yes.
right? There's been a number of filings, very public, with the SEC. People are talking about getting a Bitcoin ETF or a digital asset ETF started. What's your view on that? Do you think that's something that will create further interest, and is it going to bring in the institutional people?
That is the biggest area of interest, and I actually spoke to the US SEC when I was in New York about this. And the biggest problem is because some of the index constituents can be manipulated. So there are some some index providers or exchanges that have been manipulated. And in fact, Bitstamp, which is a very reputable exchange that is regulated, they were really manipulated. So because of the manipulation, the actual price dropped, which affected the crypto derivatives exchanges, which triggered a number of liquidations. So I actually sat there explaining what happened, because our company was affected by this also, by the manipulation downwards. And the USSC was very interested, as was the CFTC, interested in how it was manipulated. And it was done the same way that old-fashioned exchanges are manipulated. It was by a group of people. And it is this that actually has stopped the USSC from approving the Winklevoss ETFs, which is really sad. So what has to happen is the markets need to develop and actually put in anti-manipulation, actually have to stop people and ban people if they are manipulating, and only then will there be integrity in these markets so that the SEC feels comfortable enough to actually approve the first ETF. And it's sad because this is a big market. If that ETF is approved, that will be a game changer for this digital assets industry.
So I was just looking at the audience questions, and
Okay.
I think you already answered one of them, which is about market manipulation, actually, which is we still see a fair bit of people who are talking about fake trading volumes on exchanges and stuff like that. And the only way you sort of stop this is sort of they need to get regulated, or there's some self-discipline, and they sort of need to police their own market. Right?
Yes, and that's an area of surveillance that needs to happen, but it first starts with KYC. And it first starts with putting in KYC controls and knowing who your customers are. So what the Bitstamp manipulation, I think they did know who the traders were. The problem is they couldn't stop it at the time. So, and they used a number of exchanges to do it. So you're seeing what used to happen in the CME is actually moving into the crypto space, because my traders looked at it and they just said, this is the classic, I have a huge position, dumping it, and then having the futures on the other side, which is no different to what Soros did to the Hong Kong market to try to break the peg. He had huge futures positions, and he had brokers dumping the stock in Hong Kong. This is exactly what happened on this manipulation that I was explaining. And when I saw it, I said, wow, It's so similar. So regulators need to help police the market, and that's how it stops the traditional. But there are no regulators policing the crypto assets markets yet, and that's an issue.
We also want to talk about money laundering, and that seems to be a big concern, right? So is this all the exchanges just going to be a conduit for money laundering and stuff like that? But we also know that the blockchain is supposed to help combat some of this because it's supposed to be more transparent. So do you have a view on this? The exchanges are putting in controls with money laundering.
Actually, if you think about it, Bitcoin, once you have the Bitcoin, you know exactly where it's going to go because every jump of Bitcoin you can track. You can do it through chain analysis. So it's the issue of where did you get your Bitcoin from and how did you trade on it. So if the Bitcoin gets moved into an exchange, you know where it's coming from. You just don't know that it's Zhong's Bitcoin. That's the only issue. But afterwards, you can trace it. So the US has a number of rules, like OFAC rules, which basically you cannot deal with sanctioned persons. This is the issue that's actually hitting a number of crypto exchanges. And I expect that to actually change in the near future. So you're going to see actually more KYC for these exchanges. And you're already seeing it happen upon withdrawals. So is it a conduit for money laundering? In the past, that's what crypto was used for. I think now a number of exchanges as well as spot exchanges have actually upped their game. They know where the crypto is being moved from. They can see it and are actually doing GeoIP checks, KYC checks at the taking out of Bitcoin as well as putting in. You're going to see a big sea change very, very soon that they're going to have to put it in the front. So, for example, I was just talking to Claire about using either Jumio or using her system. So there's going to be more and more adoption in this area as the US government as well as other governments start cracking down on this.
So we're almost out of time, but I want to make sure we get to this topic. I know you're very passionate about getting more women involved in fintech, involved in crypto. And it's been a challenge. You mentioned that 99% of the traders are all male, right? And I think how do we start doing that? How do we start to get more female involvement in this sort of space?
I'd like to see more women in the space because it will actually amp down the testosterone. Crypto trading is so testosterone driven, and women in traditional finance apply for those jobs, try working in a crypto space. And I was the only woman on the executive committee until I hired my deputy COO. So at least there were 2 women. And we had a trader that also worked with us. This is in a company of, a major company. And we're just not seeing women moving into the space. And I would really challenge women to help women and start networks to move in the digital asset space because there just needs to be more moderated thinking in terms of not just, yeah, we gotta go forward, yeah, which is very crypto and very Reddit and very gamer. And if this is to be a real asset, there needs to be a diverse view.
Diverse view, right?
Yes. So, thank you for asking that.
Yes.
Because I'm very passionate about it.
I think one of the big themes of this conference is about the divide as well and how we can be more inclusive. So
and
definitely.
I noticed you have women speakers in every panel, which is
very good. We try.
Yes. So that's very important.
Okay, ladies and gentlemen, that's all the time that we have today. Thank you very much.
Thank you
Please,
so much.
thank you, Angelina, for joining us. I hope you found this very informative.